Hey, what's up, everybody? Welcome to episode 45 of Free Real Estate Advice Fridays. This is going to be a real quick one. I think I say that every week, but this will be a real quick one because I have a family member, my niece's soccer game. So I'll be heading out soon. But wanted to check in real quick. I got a guest coming in next week, Joe Bonadus from Movement Mortgage. If you've never heard of Movement Mortgage, we always talk about when you're putting in an offer to use a local lender. And there's a variety of reasons for this, but, just at a very high level, just look at this from a very common sense approach. Imagine that you're putting in an offer on a house. The listing agent on that house needs to have some level of confidence in the lender that you're using, obviously. Now, some of the big banks out there, the ones that you see ads for on the Super Bowl or, any primetime television or streaming or whatever it is, the bigger banks in America, those kind of land flat sometimes, because if you're an experienced agent, there's a good chance that a lot of those banks, I'm not going to name any names on a public forum like this, but you can ask me privately what my experience is with various banks. But some of those big banks, we don't have the best experiences with closing. So when you're a listing agent like myself and you get an offer in and on it is a certain, bank that's a large bank, sometimes that can be a bit of a drag. And we do have to disclose to our sellers what our experience is with that particular bank. And even the pre-approval itself, they range quite a bit. So I always use the example, you can go on a couple different websites, for example, better.com. You go on better.com, you'll have a pre-approval in 5 minutes. Literally, you can write whatever you want in there. There's no validation. They print out a pre-approval and you take that, and in theory, you could use that, put an offer on the house. I would say that offer is going to be about as valuable as the paper it's written on, because that, if me as the listing agent saw that pre-approval from better.com, I'd say, hey, just so you know, like this pre-approval, no verification is required at all. This is really just a form letter. As opposed to certain local lenders that we work with. Now, if you have an issue, like for example, and I don't think a lot of people realize this, but it's actually very common for the listing agent, if there's any sort of questions about financing or anything, for us to call the buyer's lender. And very often smart agents, when they put in your offer, they will tell the listing agent, hey, please feel free to call the lender and verify the credit worthiness of my buyers. So a lot of times we'll do that. Now, if I'm calling a 1-800 number, to just random example, throwing out Bank of America, if I call a 1-800 number to call the Bank of America rep and, I get thrown into the, waiting queue and I finally get someone, I can hear them typing, that I know they don't really know the buyer. They're just looking up the file, as opposed to calling a local lender that says, oh, yeah, I know Joe. Let me tell you a little bit about Joe's situation. Very big difference. So generally speaking, we try to tell people to try to use local lenders. And when I say local, it doesn't mean that they have to be in Clinton where I'm sitting. It just means that they're a mortgage bank that is locally established in Hunterdon County or Somerset or Middlesex or, one of the areas around us and somewhere in New Jersey. And it's someone that I can call directly and just get them on the phone immediately. Any of the lenders that I use, I probably have 2 or 3 primary lenders that I use, depending on the programs. And I can call them and get them on the phone in seconds. So one of those people, Joe Bonadus, is going to join us next week and answer some questions. He was actually in our office this week talking about a few different programs. There's 2 things that I like a lot right now that I want Joe to talk about. Number one is the Power Purchase Program. The Power Purchase Program, I think I talked a little bit about last week, but it allows someone who is currently home sale contingent. In other words, in order to buy a new house, they have to sell their current house. This is a big challenge in a competitive market, because the sellers are going to have to go for a ride with you while you sell your house. And that is tricky in and of itself, but is your house even on the market? Now, if you put in an offer and your house is under contract, that's a very different story, because, especially if you've been through inspections already, everything's been negotiated, the house is appraised, but you technically haven't closed yet, but you're closing in 2 weeks. That's a pretty strong offer. That's up there with the ones that are not contingent. But what happens very often is people are only putting their house on the market once they find a house. And even then, while I write the offer, the house is not on the market, or I'm going to get it on the market like within the next day or two. And they haven't even gotten any offers yet. We have no idea how the house is going to do. We don't even know if it's priced right yet. You can only find that out once you put it on the market. So, things like that, obviously that's much different than being under contract already. But if you want to just remove that entire layer of the contingency, this power purchase program is a really great option. And I won't get too much into it now. I'm going to let Joe talk about it next week. The other thing I want Joe to talk about is something he talked about in the office this week, and that is purchasing points. Now, anyone who's ever had a mortgage before knows all about purchasing points. And I think it's like a lot of things in lending, especially since we had a crash in recent history, 2006 through 2008. Purchasing points, I think, is a lot of times very misunderstood. I think the common misconception on it, this is coming from the lenders, is that people think that's just like another way for the banks to make money. It's actually not. It's actually a tool for the purchasers to pay a little bit more money up front in order to save a lot of money down the line. So purchasing points when interest rates are not 2 or 3% like they were, 18 months ago, is something that has become much more in fashion because it's a way to kind of work with the rates not being ideal. And, rates not being ideal is really kind of a relative term. They are still in the neighborhood of 7%. We haven't seen 7% rates in many years. So a lot of people think, oh my God, rates are so high. But I'm here to tell you, they could definitely get higher. And historically speaking, 7% actually is, it's on the higher side. Like I said, it's been a long time since we've seen those rates, but historically speaking, it's all relative. I think any of us that are my age, around the age of 40, can talk to our parents about what they paid for their house, and you're going to hear 12% up to 15, 16, 17, 18%. So purchasing points is a way to put a little more money down and avoid some of that interest expense. Another common misconception as well, that's great, Craig, but we only have enough to put 20% down and avoid PMI. If you know anything about PMI, that's the talking point that goes on a lot. And that talking point's been passed down through the generations because PMI used to be extremely expensive. So even as recently as I'd say 5 years ago, or when we bought our house 7 years ago, you did everything you could to avoid PMI because it was very expensive. PMI rates have absolutely plummeted. So I've given the example many times before, but when we bought our house in 2014, we paid $500,000 for it. We put 10% down, and our PMI was about $370 a month. And that money's not helping us in any way. It's not going towards principal. It's not paying down taxes. It's not going in escrow. It's just money that you could essentially light on fire because it's not doing me any good. And that's a big expense. We did what we had to do to get in our house. We did shortly thereafter refinance and get out of that. But that conversation has changed quite a bit because that PMI is significantly less expensive. So the advantage of working with a really good lender who's very deliberate is he's going to take your entire financial picture plus your goals and get you in a situation that will make sense for you. So sometimes that means buying points. Sometimes that means, hey, I know you said you want to put down 20%, but if you put down 15% and then take that money and put it towards points, this is what it'll save you. And any number of machinations. There's different types of loans. There's USDA loans, which most of Hunterdon County is eligible for. There are FHA, VA. There are ARMs. ARMs are a thing again. There are buying temporary points. There's all sorts of strategies. So if you've gotten cold feet about purchasing a home because you're worried about rates, you're in on about 10% of the decision process because there are many other variables here. So Joe's going to talk to us quite a bit about that. And Joe's great at talking to it and making it very accessible. I'm not a mortgage guy. I'm a real estate guy. I know what I need to know, enough to be dangerous, as they say. I do have a finance background, so it's contextually a little bit easier for me to digest. But why I wanted Joe to come in and talk about it was he is really good at making it accessible to just anyone to understand what he's talking about. So Joe will be with us next week. In the meantime, if you have any particular mortgage questions, feel free to post them in the comments, message me, text me, call me, and I'll be glad to ask Joe that question. Or you can just join us live next Friday and ask your questions during the broadcast. So that'll be next Friday. We'll get a time locked in, and I'll throw an announcement out there. But Joe is a really great guy to work with, and I think you'll be impressed with what he has to say about mortgage and interest rates and all the considerations we have these days. It was a very easy decision when rates were 2.5% or 3%. Those days are gone. He refers to them, and I like this. He refers to them as pandemic rates, like they are not coming back. And that was a thing for a little while, but it's not a thing anymore, and people still need to buy homes. So if you are in a situation where you still need to buy, but rates are now 7%, you're like, oh God, what are we going to do with this? Those are the questions Joe can answer for you. So, it's just when things get a little bit rougher. I mean, it's the same thing that agents had to do when the market was super competitive. 18 months, we all had to kind of shift strategies and figure out ways to find success when every offer we put in was up against 25 other offers. We all had to make strategic decisions. And now I think a little bit of that has shifted over to the consumer in terms of interest rates and borrowing and how you want to structure your loan. If you're self-employed, if you have hourly income, all those things can be addressed by a really good hands-on lender. So Joe and his team are fantastic with that stuff. I did a self-employed loan with him earlier this year. And, it was challenging. It's always challenging. Speaking personally, when you're self-employed, financing can be very difficult. But Joe and his team were really great about it. And we got it done. That client is in that house. They've been there for probably about 5 months. They're very happy there. And I will tell you, from that client's perspective, they thought it was something that was not possible. And now it is happening. And it's, those kind of outcomes, those kind of stories are really kind of what I hang my hat on, and what keeps me in the business, and in terms of just being challenging and rewarding for sure. So let me know what questions you might have. Otherwise, we'll see you all next Friday, and I will leave it at that. I don't really have much to say. I feel like when we talk about the market on a weekly basis, there's only so much I can say, but for the most part, things are decent out there. I think, most agents are going to tell you, if you have the nicest house in town and that's the one you want, we're still seeing 5 to 10 offers. But I think for the most part, you're going to be closer. If it's, just your standard house, it's nothing like, it's not, 100% renovated or anything like that. For the most part, we're seeing 3 to 5 offers. And, again, I say this all the time, but 3 years ago, 2 offers was reason for celebration. I mean, it was multiple offers was no guarantee on every property. We get 1 offer, and, you measure each offer on its own merits. We didn't get true multiple offer situations where, like, we have to set a deadline. You'll be very familiar with the language. If you look on Zillow or anything, you'll be very familiar with the language, final and best, or best and final, which means, all offers are due next Tuesday at 5 p.m. And then they look at all the 5 to 10 offers all at one time. 3 years ago, that really wasn't a thing. You got an offer, you looked at it, and you said yes or no. And then maybe while you're making that decision in the 24 hours, maybe you got wind of another offer that might be coming in. But multiple offers was pretty rare. So we are kind of trending back in that direction. Obviously, the rates have something to do with that. But it's very manageable for buyers now, because you're not having quite the bidding. Things are still going over asking. In the more competitive markets, I mean, we're still seeing things that at higher price points that are 50 grand over asking. But, locally here in Hunterdon, a lot of stuff's going for asking. We're seeing price drops for the first time in a while. So a lot's happening. It's a very active market. Me personally, pipeline is good. I have a lot of clients. People are still doing stuff. So if you got to do it, you got to do it. If you need to upsize or downsize or get yourself out of a situation, or you're relocating, or whatever the case may be, I mean, people still have to move. So don't get too caught up in the rates conversation, at least without having a conversation with a really good lender that can be strategic with you, and just make sure that you're maximizing your dollar, and playing the market correctly in terms of making the right move with your choices with the mortgage. Another thing you'll find with the local banks, and I'm saying local banks here, not necessarily local lender. So you're here in Clinton, Unity Bank and PNC Bank and stuff like that, New Jersey banks, or national banks. You're going to find that a lot of these programs that I'm talking about are not available. They will have conventional, and they may have a few other programs, but stuff like the power purchase program that removes a contingency like that is not going to be available for the most part. Obviously, each bank has its own programs, but true mortgage lenders like Movement Mortgage is a national company. They have some very innovative programs and very, home specific and home eccentric type programs that would be interesting to any buyer right now. So that'll be next week. And other than that, hope you're all doing well. Hope you're staying healthy and enjoying the good weather. Finally, we got a lot of rain this week, and hope you have a great weekend. I'll see you all next Friday, and get me those mortgage questions. All right. Take care. Bye-bye.